Hello and welcome to Pro Trader Strategies for July the 1st, heading into a long weekend. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios. Therefore, what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. We've got a lot of economic data to go over in the form of manufacturing PMIs here in the States and across the pond. Let's get this on. We have the Spanish manufacturing PMI came in line with expectations at 52.2, was expected 52.1, and the Swiss manufacturing PMI came in at 51.6, was expected 54.9, so slightly lower than expected there. We also had Italian PMI come in higher than expected at 53.5, expected 52.7. And remember, anything with these PMI numbers, which is the Purchasing Managers Index, it is the manufacturing side, where the purchasing managers of these manufacturing sectors are determining whether or not they should be ramping up production for future growth. So anything above 50 is expansion, anything below 50 is contraction. So then we also had the French final manufacturing PMI come in at 48.3, which is below that 50, but it was higher than expected of 57.9. So I guess there's a silver lining there. We also had German manufacturing PMI come in line with expectation at 54.5. The German manufacturing PMI came in at 52.1, was expected 50, so that was a good sign there. We also have a Canadian bank holiday. And then here in the United States, we had the final manufacturing PMI, which was 51.3, in line with expectations. But the more widely looked at manufacturing purchasing managers index, supplied by the Institute for Supply Management, or the ISM. Some people, going way back, dating myself, it used to be called the NAPALM, and now it's the Institute for Supply Management. It is 53.2, was expected 51.3. The one side note there, the only number that was really much worse than expected was the construction spending month over month construction spending was negative 0.8%, was expected negative 0.6%, so slightly, let's start that over. The construction spending month over month was negative 0.8%, was expected a positive 0.6%. So that was a lot lower than expected. Last month it was negative 2%, so at least better than last month. And then we also had the ISM manufacturing prices came in at 60.5, expected 63.9. And later on today we get total vehicle sales. So moving on to the overall markets, when I started this, everything was up, and I was going to say everything is up, so everybody's got to be happy. All markets were up in positive territory. But as you can see, crude oil /CL is down a penny on the day, trading at 48.32. On to gold. Gold's pushing higher, $18 right now at $1,338. The overall market just rallying. So there's a lot of sirens going off in my head, if you will, because everything is up, which is a bit bizarre to me. If gold's rallying, that should indicate that there is a flight to quality away from currencies, for that matter, and maybe even away from stocks. And then we can go on to the bonds, which is /ZB. And as you can see, bonds spiked huge this morning, up a point on the day, and right there at this top. This is a real resistance area for the most part. And we are well above the value area here. So it just seems a little bit overdone to the upside, but people are putting their money into bonds at these super low rates, it has to me, mean there's a bit of fear in the market, although we're seeing volatility come out of the equities, and the equities are really rallying hard today. As you can see here from the NASDAQ/NQ, which is the futures, pushing up higher, 28 points on the day, just off the highs for the most part. But yesterday it was looking almost like it was topping out here a little bit, but after today that has broken that pattern for sure to the upside. Onto the E-mini S&Ps, as you can see here, /ES is the ticker symbol for that. Testing this value area high, which we talk about. Once it goes down, blast through the point of control, which is the magnet. If it gets through there very easily, like a hot knife through butter, it looks like it's going to test those value area highs, and the E-mini S&Ps up 5 points, just over 5 points on the day, is an indication of that. Plus a lot of people putting money to work going into this holiday weekend. This is the breakdown of the E-mini S&P /ES on a 15-minute chart, daily breakdown with the monkey bars and the volume profile. And we just are now in the last hour or so coming off our highs right back down to the point of control, but up still 5 points on the day. The only thing that I'm really looking at doing here today, I've gotten long these deltas since that big Brexit sell-off. Today, the only market I'm really looking to cover are these JetBlue. The markets in there are pretty thin in the July, but I'm looking to get out of my July 16 puts. Originally sold them for 50 cents. I'm on the bid right now for 15 cents. I might just pull the trigger on that a little bit later and see what I can do. Today we're doing a webinar on a poor man's covered put, which is basically an option strategy synthetically shorting a stock. So this is a great strategy to have in your quiver of option strategies, because we all have a tendency to get really long stocks, and when the market has big pullbacks or even just slight pullbacks, it's great to have that short delta. Now remember, short delta is when you have you are shorting that underlying, and if you are just long deltas, it means you're just long everything. You just are beholden to the upward market. And as we know, at this point in time, the overall equity markets are basically unchanged for the year. So if you've been able to add some short deltas to your portfolio, you've been able to take advantage of some of those moves to the downside, and that is really important. The market doesn't always go straight up. So if you have like a portfolio, you can be looking at it and saying, I'm not making any money right now. But if you can add these different types of option strategies that I talk about, where you're selling premium a lot of times, and or synthetically shorting some of these underlyings, then you can take advantage of all market direction and increase your yield, which ultimately allows you to make money even in sideways markets. So stay tuned for that one. You can go to protraderstrategies.com, sign up for that. I also have all kinds of videos that talks about the market profile, how to set that up, how to trade against it, and several other videos all the way back to even talking about the history of options. So please go to protraderstrategies.com and check those videos out. Like them, send a comment. I'm more than happy to talk to you about those. All right? If you can't take that, take it easy.